Hi, welcome to this video today, which is all about how to learn to trade Forex successfully and become a consistently profitable trader. Now, in terms of learning a strategy, there are plenty of simple strategies that can make you money, or any trader money. However, we know that most traders fail. They fail because they lack self-control and discipline, okay? If you can't follow your strategy with discipline, you don't have a strategy. Now, in terms of getting trading discipline and self-control, anyone can actually do it if they have the right habits that they follow daily, which they are never going to break. Now, what I want to do is go through 10 habits of successful traders, and these habits actually come from my experience of teaching over the last 20 years and also my study of the great traders. So we're going to discuss 10 habits in more detail and basically why they are so important. Also, why most traders will never learn the right habits as well. But if you want to, you can. So let's go to a storyboard and discuss the habits of successful traders in more detail. Right, let's look at 10 habits of successful traders. Point number 1, they don't complicate their analysis and they make it quick. All successful traders know they do not need to make effort with their charts, for example. They'll look basically at trade setup. They'll see if they want to do anything within seconds. And if they don't, they'll just pass the trade by. Now, most beginners make the mistake of pondering and thinking about a chart. If you are doing that, you are either overcomplicating your analysis, okay? Or you might be trying to force a trade when there's no trade there because you want to trade, or you might be using someone else's strategy which you have not researched and you do not have confidence in, or full confidence. All successful traders research their own strategies. They might take ideas from other people, but they make the strategy suit them, their personality. They'll be very comfortable with it, very confident in the edge of their strategy, and they'll just basically do their trades quickly and effortlessly. Now, in terms of point number 2, they'll use checklists to enter and study trades. Now, in terms of this, I'll make reference to Charlie Munger, who works with Warren Buffett, and he says they both use checklists just to make sure they haven't missed anything, that everything fits perfectly before the trade goes in the market. He makes the point that doctors use checklists, pilots use checklists, so should successful traders. Also, most successful traders will study their trades to see if there are any improvements or tweaks they can make to their strategy to increase profitability and decrease risk. And that is a good thing to do. I noticed on one of my trade setups, I kept getting taken out by a few pips, okay, or not many pips. Then the price would rebound in the direction I thought. Only by studying the trades could I see how I could improve the stop loss, okay? So successful traders are always monitoring to see if they can improve. They don't take comfortable or obvious trades. And there was a famous trader, Richard Dennis, who used to tell the traders who he taught, if it feels comfortable, don't do it. And by that he means, a trade like buying a pullback into a support level, that sort of thing. That's comfortable. Uncomfortable trades are often the best, like when you have a really strong volatile move to the upside or downside. Very often the odds favour continuation. Don't wait for the pullback. That's just one example. And they don't do obvious trades that, let's say, the media is talking about. If everyone is talking about a trade and saying, this currency pair is going to go on to X level, then Y level, there's nothing to stop it, then successful traders be very weary of going with the majority. The best Forex traders are contrary to the extreme, okay? Now, in terms of point number 4, they trade infrequently. Don't try and force trades. They'll be very patient and they'll wait for the best trades, okay? You don't need to trade much. to make a lot of money. And a lot of beginners in particular are just too keen to trade. They take low odds setups and lose. Now, in terms of Forex, it's an odds-based market, okay? And in any odds-based market, you are best to vary bet size to increase profitability and decrease risk. It's much better than a static bet size. That's just scientifically proven. Obviously, you've got to have a strategy with an edge, but varying bet size will increase your profits and decrease your risk. Point number 5, they constantly monitor exposure and worst case scenario. This is really money management, and yeah, all great traders have good money management. They're always thinking of the worst rather than what the best outcome will be. Now, in terms of property, they always say that location is the key. In Forex, it's exposure, exposure, exposure. You want to know what your total risk is if everything goes wrong, and you want to be comfortable with that risk. Now, most beginners, losing traders, they just have no idea how much they're going to lose if everything goes wrong, and they suddenly find their account down 30 or 50%. That never happens with successful traders. They know that they need to monitor drawdown at all times and not fall too far behind. Think about it. If you fall behind by 50%, you've got to make 100% to get back to break even. Okay. Point number 6, they don't focus on screen time. You see a lot of traders on YouTube, or so-called traders, who just sit there staring at a price screen trying to trade in and out for a few pips. That's just a losing strategy. Okay, you're not going to make money doing that. You need to get away from screen time and looking at price action. Otherwise, you will start to find your emotions get sucked in. Okay, so really a couple of times a day is enough. And in terms of when you see all these traders with lots of quote screens, I was just thinking about George Soros. And he said he only had one quote screen, he hardly ever looked at it. And he was one of the great traders of all time. So you don't look at price action. There isn't anything going on most of the time. You should be focused on the bigger picture. Point number 7, successful traders have a strong opinion. You have to have a strong opinion to do a trade, okay? But you do not want to cling to that opinion if price action is proving you wrong. And losing traders just look for anything to try and confirm their opinion is right. They won't look at the counter argument. You have to look at the counter argument and be prepared to change your opinion, okay? And it was Michael Steinhardt, one of the great traders of all time, that said that the best traders are the ones who say one day it's going up, and then the next day they just change their mind and say it's going down because the facts have changed. And you've got to keep this in mind. It takes a lot more impetus to change an opinion than to keep it, and that's a psychological fact. So you've got to be very aware of it. You need a strong opinion to take a trade. You've got to be totally confident, but you also need to be able to change that opinion if the facts tell you to do so. Point number 8, they're focused on process over outcome. This means that basically they don't care if they lose trades. They know they're going to lose trades. Okay, it's just part of trading. So they just keep doing the process. The outcome of the trade doesn't mean they've done anything wrong. Okay, they know their strategy's got an edge. They don't get upset about losing trades, and they don't get too, happy about winning trades. They see it as a long-term game, which it is. Okay, and a lot of traders, they really do have outcome bias. When they get a trade wrong, they think they've done something wrong. If you've got a strategy with an edge, you know that's not true. Just focus on the process. Over the short term, the outcome can go against you. You'll have losing streaks, but your edge should prevail over the longer term. Point number 9, they work constantly on psychology and motivation. And I've quoted this fact in previous videos. One of the greatest traders of all time, Paul Tudor Jones, pays $1 million a year for Tony Robbins to basically motivate him and monitor his psychology. Now, he's been trading for over 30 years, got one of the best track records in the world. That's how important he feels psychology is. And it is. It's just so important to stay mentally focused, mentally disciplined. Okay? Now, in terms of if you haven't got $1 million to pay Tony Robbins, how can you keep yourself motivated? Personally, I just do it with books. I'm always reading at least one book a week, or rereading a book on the great traders, or on different aspects of psychology, or different kind of motivational books, or psychology or self-improvement books, whatever you want to call them. Just very important. It's a lonely game, Forex, and you've got to keep your psychology right and be very strongly motivated. Okay. What's the next point? It's the last point, isn't it? They're aware of under and overconfidence, and it's one of those professions, let's say, that whatever people say, even if you've got a strategy with an edge, you hit a losing streak, and your confidence, tends to go down. Okay, this is natural. And Vic Spirandio, one of the great traders of all time, said, if your confidence is going, have a break from trading and go away and just do anything to make yourself feel good. Get your mindset right, then come back. And also, if you have a losing streak, don't try and come back too quickly. As Warren Buffett said, if you try and get out of a drawdown too quickly, you're just going to dig yourself a bigger hole, which is true. Got to be very patient, okay? Now, in terms of overconfidence, and I've seen this in a lot of traders, they trade successfully for a while, then suddenly they have, let's say, a good amount of winners, they're making profit, they just become overconfident, they become complacent, they take too much risk, they just basically are blurred to the reality. They don't see the dangers ahead. And let's face it, whenever we have good periods in Forex trading, how often is it you get a bad period straight after? You never want to get complacent at all. Right, now in terms of those 10 points, they're all pretty simple. Anyone can learn them if they want. If you adopt those habits, they will help you become a successful trader. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.